benign interest rates and consumption demand remaining reasonably stable is going to help us for a bit more. Atsi, very quickly, your GDP number for the third and the fourth quarters.
I think I'll just divide it into two. I think non-agri, non-government GDP should be about 8%, but I think agri and government GDP, which was, the government GDP coming down because of the strong base, will bring that number to about, 6% odd in the third quarter, because agri will be the main drag and non-government won't help. And then in the fourth quarter, I think you'll see 7% or thereabouts, depending on how agri plays the wild card. But I think the important number to focus on is non-agri, non-government GDP, because that's the momentum that's going to sustain you through 2010.
Atsi, I take your point. I take your point entirely, but we would still want what an economist is looking at this point in time. Samiran is going with possibly a 7%. I mean, a very, very rough and dirty number. Would that be your number?
I think certainly, given what we have arithmetically, for the first half, it's entirely possible that even if it's not 7, I think it'll be somewhere between 6.75 and 7.3, and that would be good. But I'd like the driver of that to be, manufacturing and non-government services. I wouldn't like the driver of that to be again government consumption or government expenditure. So that would be what I'd be looking at.
Point taken. The advantage in this quarter is that everything is driving it. There is consumption, there is IIP growing, there is gas production that has come in and has taken mining to 9.5%, and that's continue to chug along because it's anyway available for the country. So all these things are working at this point in time. Thanks, Samiran and Atsi, for joining us. Now we have the market reaction coming in. Amit Dalal joins us with a fundamental perspective. Amit, the market is just giving away a wee bit, but still 7.9%. How will you look at this number from here on when you buy stocks? Do you think that there is a long-term growth story and that EPS numbers will have to be revised higher?
Absolutely. I think that, it's completely a surprise to the market. No one expected it to be so high. The fact that agriculture numbers come positive also is something which is not to be looked at lightly, because there's lots of concern on this rural consumption story continuing, and obviously there is no threat over there right now. So I think the investor is now completely secure in looking at the long-term story being a far, far better picture than what he could have envisaged.
What is the sector that you would concentrate in? We're getting excellent numbers for mining. We've got very good numbers for manufacturing as well. And the few corporate people we spoke to indicate that the second half, for instance, Ravi Sood of Hero Honda, believes that the second half consumption should not flag off irrespective of how interest rates went. So what would be your, how would you translate this GDP number into stock market action?
I think the sectors remain absolutely what they have been in terms of their leadership. I would look at autos at the top end. The power sector has also shown very good growth. I would definitely look at the energy sector. And with that, the energy equipment manufacturers, who perhaps did not give us the kind of numbers that we should have seen in the second quarter, but we will see in the third. The infrastructure story, whether it is large cap infrastructure plays or even the mid cap or small cap, which are involved in road construction. And the only sectors perhaps I would remain wary of, and this is what I have always been concerned about, is the international commodity pricing sectors, which are dependent on, say, the price of copper or the price of steel, which is not really within the shores of this country.
Okay. Amit, stay
and of
with
course,
us.
Banking remains a positive.
Okay. Amit, just stay with us. We've got another important representative of industry joining us, Adi Godrej, Chairman Managing Director, Godrej Group. Mr. Godrej, this is a huge surprise. We're looking at a 7.9% GDP number. Private consumption expenditure has also gone up by about 6%, which is so much better than the 1.6% growth in the first quarter. What's your comment on this performance?
I think this is an excellent performance. I think all of us were indicating that from observational point of view, the economy is doing very well. Most consumer products companies have posted excellent results in the second quarter. I think this confirms that consumer confidence is high, consumer demand remains very strong, and that the Indian economy is back to a very high growth rate. To my mind, the GDP growth this year will cross 7%. And I think this trend clearly leads to a possibility of even a 9% growth in the next fiscal.
Mr. Godrej, thank you very much for joining us with those details. Amit Dalal, thanks a lot for joining us with the stock market perspective. So that's extremely good news on the macroeconomic front. It's a 7.9% GDP growth. Yes, there are a couple of caveats here that the agricultural growth contraction, which was expected in this quarter, has probably not been entered in because the net sown area is what is taken in this quarter up to September 30th. The actual harvest comes into the numbers in the third quarter, and therefore in the third quarter, agriculture always has a higher weightage of 20%. Otherwise, it has 16%. And therefore, the contraction will be slightly exaggerated in the third quarter. There is that caveat. Government expenditure has been very robust in the second quarter. That perhaps may flag off because it will inevitably have to. The government cannot go on pumping so much money. So if those two do not oblige, then you could have a slightly lower number when it comes to the third quarter. But you're still belaboring with a very, very low base. It was only a 5.8% growth in the third quarter last year. So perhaps we will still make it to well above 7%. Perhaps one person who will be able to tell us all this is Rajiv Chandrasekhar, Member of Parliament, Rajya Sabha, but also a very important industrialist. Rajiv, what do you make of the 7.9% growth number? You have your finger on the pulse of industry as well. Do you think this is sustainable and we are going to have a shocker of a number in terms of GDP well over 7% this year?
No, Lata, I think we should be careful about, breaking the champagne bottles at this stage. I think we clearly expected that on the back of the stimulus package and this, considerable amount of liquidity in the system that the economy would reverse and the trend would be as we are seeing today. The challenges obviously are what you just alluded to about a little earlier in the show, which is that as we start trying to exit and moderate the quantum of government spending and the stimulus going forward, given the concerns that the RBI has in terms of the asset bubbles and inflation, how sustainable would this revival prove to be? And I think the focus is really on the sustainability of this trend that we ought to be focused on. And I am not completely convinced that we are there yet, because, like you correctly said, a large part of this is based on a smaller base a quarter ago. And so therefore, we've got to see this a couple of quarters back to back to arrive at the conclusion that we are on a sustainable path of an economic revival.
Do you fear at all that inflation is going to get way out of hand? I mean, I'm not asking you as a practicing economist, but purely as someone who's observed both the political and the economic setup and the interlinkages for so long. We are going to see this base effect play into a very high inflation. We are seeing a huge amount of liquidity pushing up commodity prices. At the same time, we have this chugging on personal consumption expenditure that's rising. Is this going to be a serious cocktail that will push up inflation into an unmanageable level?
No, like I said, I'm not a practicing economist at all, and I don't want to pretend to be one either, Lata, but I think this is a concern. This is a concern, and if you just dice up these pieces, is a concern that the whole problem of rising asset prices, which caused some of the problems of last year, is resurfacing because of the excess liquidity in the system. There is clearly a phenomenon that is political now, that is being debated in Parliament, and people are quite fired up about it, which is the increase in just the prices of food products and commodities. Yeah. So all of this, even if you take pieces of it, are issues of concern. And as I saw on your channel as well, the Reserve Bank has already made it known that they are quite concerned about the impact of this increased liquidity on potential inflation down the road. So I think these are the two challenges, which is one is that we have to make growth sustainable, at the same time address these clearly visible signs that are making people in the Reserve Bank and other central banks reasonably concerned, which is of inflation and rising asset prices.
All right, Rajiv, thanks a lot for joining us. Out of time on the show. But really, while we celebrate this 7.9% GDP growth, let's remember that the Reserve Bank will have its task cut out. It's not a joke to have a 0.75% policy rate and huge liquidity in the system when one is faced with a coming inflation guaranteed at 7% in a month or so and GDP at 7.9%. Clearly a monetary policy that's out of sync with the parameters, with the macroeconomic parameters. We wrap up this edition on this special show on the GDP numbers on that note.